Hi, good morning. Shall we start? So, what we are discussing is taxable income. Right now, we have completed taxable income from business. Right. Another few areas we can discuss the development and the changes, but we have covered some items. Right, we'll discuss separately. Currently, I seek to test those type of things as an assignment, and therefore we ready for that run until last you complete your studies, but to the level what we have done up to now. Right. On and off, I am giving some sort of views that is not actually any markings to your final exams or whatever thing, but you just to refresh your knowledge. Like last week we did, right? Today what I want to discuss with you on the taxable income from investment, right? So that is the third income source as per the revenue law, taxable income from business. There are another one source we to discuss, that is taxable income from other sources. Thereafter, we have, I believe that we have completed taxable income from employment previously, and we'll touch a little bit on that after. So then we completed that area, the total taxable income. Thereafter, taxable income, I hope to complete next week. Next lesson, discussion. So, as I told you that we'll have some sort of group presentation as well as individual presentation under the individual assignment, right? And some sort of revision of the previous discussion in the form of quiz or the question bank. Right. So, if I summarize the last discussion what we had, so we discussed that taxable income from business. So we have discussed taxable income from business, right? So you know that once we work out these sources separately, then as per the section, we say 3 says taxable income from each source needs to be worked out separately, and taxable income from each person need to be worked out separately, right? So once we work out taxable income from all sources, we call it a total taxable income, right? From total taxable income, we can deduct 2 items. That's the only deduction that we can do once we work out the taxable income. And it's under section 52 reduction, qualified payment and relief, right? So qualified payment and relief basically that is kind of expenditure. Therefore, remember, once we work out the income, we cannot again deduct any income if any income comes under the accessible income, right? So when we work out the accessible income, then any exemption or not part of accessible income, we have to remove. That is the way to we work out the taxable income. So you remember when we work out that business income also if there final payment or the same amount we have to remove. And thereafter there's what the thing that need to be included. Right? Then under the employment income also you may learn that one. Comma we have to exclude when we work out the employment income. Taxable income from employees. Right? So here we can only deduct expenditure kind of thing. That is qualifying payment and delay. So these two are some kind of, as I mentioned, this is anywhere qualifying payment it says, but it says payment. So just like expenditure, right? Another thing I want to highlight, I'm again highlighting this one. So here we are work out taxable income, but in Sri Lankan context, section 2 say who are the person liable for Sri Lanka income tax, person who is having taxable income, or person who receives final withholding payment. Right? So here entire task is to work out the taxable income. So before we work out the taxable income, we need to work out the taxable income. That's why we work out the taxable income. So in Lanka law say how to work out the taxable income. Right? That's why we work out taxable income under each source separately. Right? So yeah, I believe that comfortably finish that business income, taxable income from business. Today we are going to start taxable income from investment. Right? We'll see what is taxable income from investment. So as per the law, tax law, it's a investment. What is investment? Right? What is investment? It's given definition. It's investment. So difference between the investment and the business income. Give me an example for the investment income as per your knowledge. Example for investment income. Sorry? Yeah, dividend. Dividend income. Any other example? Income. This type of investment that are the component of investment income. Right? Some categories of the mode that income is generated. So basic difference. If I differentiate the business income and the investment income, so we call in tax language the income that have two types of things. One thing is passive income. Right? So passive income means the income receiver, the receiver need not to make much effort to get that income. Right? Effort for the activity or the involvement to generate that income is very minimal. You know, so if I invest in a company on shares, the company is performing well, then they are declaring dividend. Right? They are declaring dividend. You need not to worry about day by day, right? How much dividend they are giving. So what is the things happening? Unless it is a private ownership. Right? But the company side, they have to do much effort to generate their business income. This is their income. That is business. Right? In the employment also say. But in case of the investment income, the income holder or the owner of the income or the recipient, his involvement is very less. And also the effort to need to generate that income is very less. Say I put up a building and I gave under rent for the lease arrangement to somebody to use that. So then that particular person is using and he has to pay rent. Right? If I set up a hotel and if I notice that trying the hotel, so I have to be there at least the considerable the time I have to spend for that. Compared to the building under what I have given under rent arrears. Right? Yeah, of course, there are maybe some sort of involvement. We have to check that whether the tenant is using the property in the agreed way, and any repair or the maintenance that need to be done. But compared to the hotel business, that is very low. My involvement is very low. So that type of income we call.
Excuse me, sir. You are mic. Sir, you have muted your mic.
Can you hear me now?
Yes, sir. Now it's fine. Thank you.
Right. Therefore, compared to the business to the employment income, the investment income, the recipient's involvement is very low. And also risk is low. So that's why that when we evaluate the business or the project, you know that we are using some sort of technique, say net present value, IRO, RO, whatever it is, right? So here, and that type of discounted cash flow method. So we are using what is that? WACC to evaluate, weighted average cost of capital to evaluate the project. So basically, I think you know that how it was called the WACC. Basically, the WACC is the minimum return what we are expecting from the investment, right? Investment of the project, right? So that is how we are comparing. If we put it to that particular money to the investment to the bank, what we are getting, and if we put it that money to the business, what we are getting. The bank return is higher than the what we are expect a return from the business. Better to go to the bank and keep the deposit and getting that interest income. So we can put it to the share market or whatever it is, right? Reason is that expected return is low compared to the bank deposit. Likewise, we do work out the weighted average cost of capital. We are using some sort of model. So that basically using that bond rate or whatever rate as the base rate. There have to be embedded what is that risk factor and all those things, and there have to be work out the weighted average cost of capital. That's right. So if that return is on that bank deposit is higher than the business, so nobody is going to do the business. And apparently, risk is higher. We are investing in a business, right? Risk factor is high. So high risk, high return. So that's a dimension. So what I want to highlight again. So compare the business income, investment income more towards the passive income. The recipient need not to give much effort to generate that income. Right? So as per the tax law, it says investment means the owning of one or more assets, including one or more assets of a similar nature or that are used in an integrated fashion. It says integrated fashion. Right? Integrated fashion. As a fashion, just like fashion, style, whatever. Somebody is making investment owning assets, that is coming under the investment. Right? It doesn't say if you are making investment in the share market, it is investment. It could be business. Depending on the fashion he is doing. Right? So reason is that you know that some are they are totally making the investment in the buildings. Right? Example, I could say in this way, company can set up an apartment and rent out. That's their business. Why? Companies, what the intention of setting up a company is to earn profit, generate profit. The business organization. So then it is not coming under the investment. Right? So it says that it includes the past, present, or prospective investment but excludes business or employment. Right? Why business or employment is not coming under the investment? Says, right? So as per the tax law, it says first we have to check with any income which is coming under the employment, or we have to work out under the employment income. Therefore, it can't be come under investment income. And also, second thing is business income, second income category, as well income, right? So other one is a game of chance, including lottery, betting, or gambling. That is also coming under the investment. That is also coming under the investment. Game of chance, including lotteries, betting, or gambling. That means rewards, winning from lottery also coming under the investment income, unless it is done as a business. Say, you know that in case of a casino, somebody is setting up a casino company and doing a casino club or whatever he is doing, that is not coming under the investment. That's what I mentioned. It is coming under the business thing, not coming under the investment. Right? So if I get the lottery, tickets or whatever things and I got a reward, then it is coming under the investment. So a person's income from my investment for the year and calculate the person gain and profit from that investment for that year. In calculating a person gains and profit from my investment, derived or received during a year of investment, the following amount received or derived by the person during the year of investment from the investment shall be included. These things need to be included. This is dividend, interest, discount, charges, annuities, natural resource payment, rent, premiums, and royalties. Right? Dividend, interest, discount, charges, annuities, natural resource payment, rent, premium, and royalties. There, as an integrated holding an asset as an integrated fashion. Reason is that, so here it says again, 1 billion as interest. Also, it says should be part of investment income. We need to include when we work for the investment income. In case of the bank and financial institution, if you check the financial statement, comprehensive income statement, the interest income and interest expenditure coming at the top line. Right? So therefore, in that particular institution or the company, it is not coming under the investment income. It's the business income. And you can understand what the difference between investment and business. Right? Right. Gain from the realization of investment assets. Gains from the realization of investment assets. Right? As calculated on the chapter 4, that's how to work out there. It says gains from the realization of investment assets. Remember, it's investment assets. Right? Amounts derived as consideration for accepting or restriction on the capacity to conduct the investment. That means if somebody is given some amounts, we do not to do that investment, or we to do that investment, that particular money what we receive also need to be considered as part of investment income. Gift received by the person in respect of the investment. Example. Says gift received by the person in respect of the investment. Can you give me an example? You know those things. Gift received in the connection or in respect of the investment. No. No. Especially in the bank deposit, they have some sort of, just like lottery or whatever, right? They are doing, okay, you are selected for this thing, you are getting a motor vehicle or whatever, right? So that is in respect of the investment. If it is the case, it's also part of your investment income. For tax purpose, say you have whatever bank, they are telling that, okay, you make a deposit of say 500,000 or 1 million or whatever thing, you will be entitled for a lottery, right? If you win one from that lottery, then you are getting some, say, assuming luxury vehicle, right? So that is in gift received in respect of investment. Winning from lotteries, wedding or gambling. Other amounts required to be included on this act. In calculating person gains and profit from investment for the year, the following shall be excluded. This will be removed. That is XM amount and final withdrawing amount. So that's what I mentioned. I am repeating again. XM amount anyway when we are working out the accessible income, we have to remove. Remember, so under the business income also we have some sort of exemption, right? Under the investment income also we have some sort of exemption, access. These things are exempt from income tax, right? So then XM amount we need to work out. So at which point when we work out the accessible income. When we work out the accessible income, we have to remove if there any exemption which is coming under the 11 Act. Right? And final withdrawing payment. So why we are taking over the final withdrawing payment? Why? Here, what we are going to do? We are going to compute the accessible income from investment. Why we are working on accessible income from investment? We need to work out the taxable income from for that particular person. Right? So therefore, that final withdrawing payment we are in. So we didn't come across final withdrawing payment under the business income and employment income. But here, yes, under the investment income, says some are final withdrawing payment. So at section 88 says these things are final withdrawing. It shall be liable for withdrawing tax, but it is final withdrawing. Final withdrawing means once the particular payer deducts that tax, so there won't be any tax on that. That is the maximum tax that particular person needs to pay in Sri Lanka. Right? Reason is, if it is not final withdrawing, it shall be coming under the accessible income. If anything comes to the accessible income, it goes to taxable income. If it is part of taxable income, that particular income is liable for tax at the rate that particular person is liable to pay. By putting it in a simple way, say employment income is not final, but when the employee is making the payment, he is deducting that, but it is not final withdrawing. The employer has deducted tax at 10%, right? But it is not final withdrawing to the recipient. The recipient individual taxpayers tax rate right now can be close to up to the 36%. So then that particular employment income may be taxed at the 36% in Sri Lanka. Right? If that particular withdrawing tax is the final withdrawing, if it is the final withdrawing payment, then it shall not be part of taxable income, and it is not coming to taxable income, then it is not subject to tax at 36%. It's taxed at the rate, but the payer has deducted for the whole or the payer that tax department under the idea of whatever is needed. Right, without that. Clear? So, therefore, under the investment income, we learn what are final withholding tax. Right, so I plan to discuss the withholding tax mechanism also together with this one, and again we are discussing under the tax credit also. But here we discuss that as because there's a very big link withholding tax with investment payment. Amounts that are included in the calculation person income from employment or business. So that is we have to remove why we need to work out the particular part under that one. So what is dividend? So it says dividends. Dividends means a payment derived by a member from a company, whether issued as a division of profit in the course of a liquidation or reconstruction, in reduction of capital or share buyback or otherwise. Simply put it in this way. Member of company. Who are the members of the company? Shareholders. Right? Shareholders. Means a payment derived by a member from a company, whether received as a division of profit. It is called division of profit, distribution of their profit. It may be under normal, in the form of dividend. Company can distribute their profit as dividend. Or if they are in the course of liquidation or reconstruction. Reconstruction means they are reformulating the capital structure, capital structuring. In a reduction of capital, the reduction of capital also. Oh, share buyback or other. If they are distributed division profit, in this form also coming under the dividend. You know, say under the in case of the company, if there is residual amount, that means at the liquidation, if there is balance amount, that is belongs to equity shareholders. Right? So that need to be given to them. That is also part of dividend as this one. Right? If they under the share buyback, they are paying any additional amount, that is also coming under the dividend. If it is pay as what is division of profit. Right? Includes the capitalization of profit. It says includes capitalization of profit. Whether by way of bonus share issue. So then in case of the bonus share issue, that is also considered as capitalization of reserve, right? And it is also part of dividend income. Remember in that particular sense. So companies distributed dividend, so then they have to deduct tax. Companies issuing bonus here, again they have to pay tax. They have to deduct and pay tax. Right? So in the case of the recipient's hand, he is not getting any cash income, but he is getting his share capital going up by getting the bonus share. Right? But right now it is subject to withholding tax and it is final. So therefore, in the hands of the recipient, he is not supposed to pay any tax. But when the company is distributing dividend, when the company is issuing bonus share, they have to deduct tax and pay. Right? Whether an amount is distributed or not, and exclude a payment to the extent to which it is matched by a payment made by the member to the company. What is it? Okay. Capitalization reserve shall be include. Exclude a payment to the extent to which it is matched by a payment made by the members to the company. What does it mean? What does it mean? These things are not coming under the dividend. So here, what is the meaning of that? Matched by the payment made by the members to the company. It says, in case of the share buyback or the liquidation, if a company pays something to the shareholders, it could be categorized as a dividend. But what the amount member paid to the company, and if it is prepaid, that is not dividend. So you know in the buyback how it's happening. Company purchase its own shares. Company is paying to the existing shareholders and getting that share buy back to a company, right? So, and such case, if the company paying something which is equivalent to the contribution made by the shareholder to the company, it's not dividend, right? The repayment of capital. Distribute, dividend to a capital share premium or similar account. Share premium or similar account or capital account, it is not treated as dividend. Otherwise, considered a final installment payment or it's including calculating the income of the member. So the final installment payment is not coming under. And also, if anything which is considered for the calculation of the member's income, it shall not be treated as, it shall not be considered as dividend. So that is dividend, right? So remember, in this case, in the bonus share, especially, bonus share is also coming under the dividend, right? Distribution of profit to the members, right? Right. Any question? So these are the categories coming under employment, investment income, right? Then means a payment including a payment of a premium or likely amount for the use of or right to use property of any kind. Then it is payment. It is payment of a premium or like amount, similar amount for the use of right to use property of any kind. Payment for the use of a property or right to use of a property. Right? That is called rent. Right? Say just like building. Say building, I'm using. For the use, I have to pay. So that is coming under rent. Or right to use of the property. Right? So ROU assets, so just like lease, that is also coming here. Right? Includes the payment for the rendering of or the undertaken to render assistance ancillary to the use of or a right. But exclude the natural resource payment or a royalty interest. That is not coming under the rent. Royalty payment for the natural resource because it's separately recognized by that payment to natural resource. Therefore, it is not coming under T. Right? That is called rent. Basically, what is the meaning here? The use of property of any kind, payment, or right to use of that particular property. They are paying anything that is coming under the rent. It could be land, it could be building, machinery, right? Equipment, that type of thing. But it says natural resource payment or royalty is not coming under here, right? Royalty is also some sort of payment for the use or the right to use. That's right. Because it's separate to recognize what is royalty, so therefore royalty will be worked out separately. So then royalty. Royalty means a payment including a payment of a premium or like amount derived as consideration for the use of or right to use a copyright of literature, artist or scientific work, including cinematographic films, software or video or audio recording, whether the work is in electronic form or otherwise. That is coming under royalty. That is also right to use. That's what I mentioned. So basically, intellectual property type of thing. For that thing, we have to pay. That is also property called intellectual property. So payment for the use of intellectual property or right to use of intellectual property, that is basically going under the royalty. It says including payment for the software also. Right? Software. I mean our next major topic is taxation of non-resident. So there we are discussing this thing. Right? Therefore, this is a very important topic, royalty. Payment for the royalty. Payment under coming under the royalty. So it says the use of or right to use the copyright of literature, artistic or scientific work, including cinematography, graphic film, software, video, audio recording, whether the work is in electronic format or otherwise. The use of or right to use a patent, trademark, design or model, plans or secret formula or process, that is also coming under the royalty. Right? You know patent rights, right? We have to register and then somebody can use that one or manufacture, but the holder need to be there, may be payment to the patent holder. Right? That is for the innovation, innovative product or whatever. Trademark. Just like a brand or whatever. Design or model. Plan. A secret formula or process. Right? So payment for that thing is coming under the royalty. You know that in case of some drugs or some food items or beverages, there may be payment to using the secret formula. Recipes. Right? So therefore payment for that type of thing, that is also coming under the royalty. The use of or right to use an industrial, commercial or scientific equipment. Here says equipment, scientific equipment, industrial or commercial. Right? That is coming under the royalty. Remember. So property, I told you that payment for the use of property basically coming under rent. But this type of property is coming under the royalty. Okay? Industrial, commercial or scientific equipment. The use of or right to use information concerning industrial, commercial or scientific experience. The rendering of or the undertaking to render assistance ancillary to a matter referred to the above or total or partly forbidden with respect to a matter referred to above. And that means any that type of thing. Topic using or ancillary to that this type of activity, ancillary activities, if anything payment, that is also coming under royalty. Right? So basically, as I told you, that royalty is for the use of intellectual property. Right? For the intellectual property. Patent right. What is that? Copyright or design, trademark, any scientific experience, that type of things, right? The very similar definitions are there in the double tax avoidance agreement also. That is actually when we are discussing the non-resident taxation, tax on non-resident person, we are discussing that double tax avoidance agreement. That role definition is very similar to that. Right. This is you have to give some weight here. By when we are discussing that withholding tax, you can understand that. Annuity. Annuity means payments of the purchase for some sort of annuity. That is a fixed amount we are paying for a period. That is coming under the annuity, but lease is not coming under the annuity. So natural resource payment means a payment including a premium or like amount for the right to take natural resource from land or the CEO, calculating whole or part by refer to the quantity or value of natural resources taken from land or the sea. Right? Any payment which relate to the use of the natural resources says taken from land or sea. That is coming under the payment for the natural resources. Right? So when we discuss the what is that rent, it says payment for the natural resources is not coming under the rent. That is use of some sort of property, right? So here we are taking from land something. We are taking from land or sea. So that for the usage, if you are paying, that is coming under the natural resources. Payment for natural resources. Right? You know that for the construction purpose, we did mining from the sea then. That is taken from sea. We are making any payment for that one, that is coming under payment for the natural resource. Right? So then the definition. Natural resources means minerals, petroleum, water, or any other non-living or living resource that may be taken from land or the sea. Land or the sea. Right? If I must say, you know that especially oil, petroleum mining. So if we don't have that technology, we can get somebody to help us, and they have to get that thing from our land, but they need to make some payment. That payment coming under the category of payment for natural resources. Right? Right. So then interest. Interest a payment including a discount or premium paid under a debt obligation that is not a repayment of capital. Repayment of capital is not that is also payment for that under the debt obligation, but repayment of capital is not interest, right? But other things coming under the interest is discount. And the definition goes as including discount or premium. You know that in case of the treasury below the board, they are showing it at a discounted price. At the maturity, you are getting the face value. So that difference is recognized that should be recognized as interest. And also other payment functionally equivalent to the interest. So on the swap arrangement, under the financial instrument, you will learn that swap arrangement, we are making some payment for the functionally equivalent to the interest. That is also should be treated as interest. Commitment, guarantee, or service fee paid in respect of a debt obligation or swap agreement, and a distribution by a building society. That is coming under the interest. So this is anything I think you can understand this one, because you know that this is just like payment for the financial instrument, right? So say we made a deposit in a bank, they are paying something. So that is coming under the interest. So we purchase some document, just like the deposit certificate or whatever thing, at a discount price. At the maturity, we can get the face value, total value. So then the difference between the what we pay for the purchase of that document and what we realize, that should be treated as interest. And software arrangement for the shopping everything. So we have to pay for that arrangement. So that is the recipient is getting this as interest for the tax purpose, right? So and also it says a distribution by building society. You know that in case of the condominium and all those things, they have some sort of building society. Then if they are making any distribution to the member, that is also treated as interest. Discount charges premium, that is also separately we are dealt with. Discount charges or premium, that is also part of investment income. So next thing is gains from the realization of investment assets. So this is a new area actually. Gains from the realization of investment assets. So basically, we discuss this under the capital gain tax, right? So realization of gains from the realization of investment assets is generally called capital gain. So that is also part of investment income, right? Realization of investment asset, if there are any gains, that should be worked out under the investment income, right? Amount derived as the consideration for accepting restriction or capacity to conduct an investment that needs to be included. So what is then investment asset? So gain from the realization of investment asset under that one. What is investment asset? Means a capital asset. Investment asset means the capital asset held as part of an investment. Capital asset held as part of an investment, but exclude the principal place of a resident of an individual, provided it has been owned by the individual continuously for the 3 years before disposal and lived in for at least 2 of those 3 years. That is not part of investment asset. Remember, the first thing is investment asset means capital asset. We don't know what is capital asset, but investment asset means capital asset. And that capital asset is held as part of an investment. As part of an investment, right? So why it's highlighted there? If any capital asset held not held as part of an investment, it's not coming here. Capital asset held part of an investment is coming under this. Right? Right. So then it says exclude the principal place of residence of an individual. Individual resident place, condition is should be principal place. It is excluded. Another 2 conditions need to be satisfied, provided it has been owned by the individual. Respective individual should have the ownership of their property and continuously for 3 years, and he should live there at least 2 years for that 3-year period. If it is the case, it is not considered as investment asset. If it is not the case, it shall be treated as investment asset. That is the meaning of that one. So even principal place of residence could be treated as investment asset. Say I have 2 houses. They have to first decide what is principal place. Principal place of residence. So then obviously other house is coming under here. If I sell that house and if I got a gain, it should be liable for tax under this category. What is realization of investment asset? Right? I have one house, but I don't have the ownership of 3 years. And this was I got a gain, then it is also coming under the investment income. What is gain from realization of investment asset? Right? I have a house. I have the ownership of house. More than 3 years. If I have not lived there 2 years, then again it is coming under investment asset. Right? Coming under investment. So if I dispose that thing and receive the gain, then it should be coming under the gain from realization of investment. Yes. Gain from the realization of means so gain from the realization of means that is on the disposal. Transfer. Right? So otherwise we cannot work out the disposal. So that should be disposal. If there realization means transfer of the ownership. That is the sale. So I have 3 houses. One house I sold up. So then that's a realization. So then if these conditions are not satisfied, then it could be it shall be coming under the gain from the realization of investment, right? Subject to tax. So I'm to say if I have 3 houses or 5 houses, if I have not disposed, no realization. First thing it should be realization. So that's what it mentions. Gains from the realization of investment. It should be part of investment income. Right? Part of investment income. Then what is investment tax? Right? What is investment tax? So this 3-year period is worked out on the daily basis. Right? How many days he lived there? How they can check that? The tax administrator, how they can check whether that particular person has lived there or not. How they can check. These are practical things. The barn up here, I can hear that thing. 3 years. How you get a certificate from Gram whether that particular person was there or not. The Gram that we can get within Pallay. Any other thing? Yeah, utility bill, one thing. So bills coming under the owner of the property. Another thing is very important thing. I don't know whether they are verifying that one. They can check with the voting list. So in that list, it should be there. Because somebody can have a house here, but he is not in Sri Lanka. These things happen, right? And the recent past, these things happen. They migrated or they went to whatever. They have the ownership, but they have not lived there in that particular property. Right? Practical. So then what is capital asset? So capital asset means, that is also meaning, exclusive definition, means each of the following assets, only these capital assets are these things. Remember, it says investment assets are capital assets. Keep as part of investment. These things, land or building. Land or building. A membership interest in a company, partnership or trust. Membership interest in a company, partnership or trust. A security or other financial assets. Financial assets. An option right or other interest in an asset referred to in the foregoing paragraph. That means these things. But exclude trading stock or a depreciable asset. Trading stock or depreciable asset is not coming under the capital asset. So land or building. There's land or building. Just say. That is capital asset. Right? So then, if any realization is capital asset, means it can be coming under the investment asset. If it is realized, then gains from the realization of investment asset shall be liable for tax under the investment income. Right? Clear? Question? Question? No. Sorry? Building? Yeah. Yeah, depreciable asset stays, there's a definition for that asset. So that's one thing. Okay, depreciable asset. But it's we'll discuss what is depreciable asset. We have that definition, right? Okay, then we'll go to that one. So depreciable assets. Depreciable asset means an asset to the extent to which it is employed in the production of income from the business, and it is likely to lose value because of the wear and tear, obsolescence, or the passing of. So it says that is asset to the extent to which it is employed in the production of income. Well, also depreciable assets, but definition for the depreciable asset is what is particular million should be used in the production of income. If it is the case, here it is depreciable asset. So and it says I mean the normal definition for the depreciation, right? There and there. So or the passing of time, technical obsolescence of the normal obsolescence on that because of the time. Exclude goodwill or interest in land, membership interest in an entity, and trading stock. Okay, we'll back to that. Only that one, right? Now it's clear, right? Yeah, it is a depreciable asset, but what? But the condition it should be used in the production of income in a business. It is the case here, but it is not coming under here. So, any question? No? Yeah. End of which means say give me some example. So not used for the production of income means what is that? No, it's not just like production means not like what we are using as day-to-day language. Say you would say we have a factory, we have office. Whether that office coming under here? So now first thing we have to give the clear understanding of what is production of income. Use in the production of income is not only the factory one. Production of income is the whole activity what we are doing for the generation of that income. Yeah, it is part of business. So production of income is that particular sale. If we just put the, so we set up a factory or the plant, but if we have not used, that is not including the production of income, even if it's a factory. Remember when we were discussing on section 12 under that interest income, interest expenditure, I told that. So that particular asset need to be used in the business. If it is used in the business in the generation of profit, generation of income, that means not only that factory building, it could be what is factory building, it could be office, but that whole it's the whole activity, right? Otherwise, we cannot do that business. Say planning need to be done from that office, and so attraction of customers, and keeping financial record, working capital management, treasury management. That is happened through the head office. That is not done by the factory, but it is all the part of that, all the process. It's that is business. Clear? So anything? Any question? No. Can I ask question? There is no solution. Yeah. Again to the particular question. So say I have a factory building, and this was that part. So that is coming here. Question. So say we are doing a manufacturing. So I have a manufacturing company. So the company have some factory building. Right? Company sold the one of factory building. And then I mean there's a realization of, so that's building. So where to park them? So I have think about say 50 million or whatever thing gain from the realization. Where to park? Which category of income we are recognizing that? Tell me. Sorry. Investment income. Investment income. Investment. Business income. Business income. Business income. Business income. Business income. Investment income. Investment income. I am saying business income. Investment. Business. Business. Investment. Business income. Investment. 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 Business. 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 So that's our way of first thing. So I told you that for that I have a manufacturing business, the company has a and The one of factory building I have sold. So this with is it a capital asset? Not as per the economic already. You checked the tax law. Is it a capital asset? Yes or no? Yeah. Right? It gave the definition. Capital asset means each of the following assets. Land or building. Coming to the building. Yeah, it's a capital asset. Right? So whether that capital asset is part of investment asset. Go with the definition. Investment asset means a capital asset. Investment asset means a capital asset held as part of an investment. Is it that building, a particular factory building is part of as investment? No, it's not part of investment. It's part of business. Therefore, it is the disposal of the factory assets or the factory building. It is part of business income. Remember, when we check with that business income, also we told that same thing. Realization of the assets. It's not asset. Capital asset or liability. Can be accounted separately. So that particular building, also factory building, yeah, it is then capital asset, but it's not part of an investment asset. Therefore, it is not coming here. We have to work out separately that. Right? And also it says. So that's the first question. Second one, I'm doing a real estate business. I purchased a block of land. And I put it to the plot up and I'm disposing that part. Tell me whether it is coming under here or else. Business income. First thing, tell me whether it is coming as a capital asset. Coming as a capital asset. Coming as a investment asset. Oh, is it capital asset? Business income. But tell me, that is coming as a capital asset? No, in fact, I didn't know. Yes. Huh? No. No. Yes, real estate business. Coming as a capital asset? Yes or no? No. Then? There is land or building. So first thing is capital asset means investment asset means a capital asset held as part of an investment. So then it's not investment. So then I got to know active and angle. So capital assets means each of the following assets. Following assets. But excluded trading stock for depreciable assets. So then depreciable assets means assets used in the business, production of income. So then it is also not coming. So and also trading stock. What is that plan? What is that statement of financial position or PPE? What is? What is? Inventory. Trading stock. Trading stock. This comes trading stock. Not under the capital and current assets. The current assets, right? So trading stock is not anyway coming under capital assets. Therefore, it is not coming under the investment assets. Therefore, it's not coming under the gains from the realization of investment. That's the way you have to think. So that is that's the beauty of this tax, right? Because if you know the law, it's very clear. Because it's clearly stated, give that scope. As I mentioned, scope 2, under section 2, it says taxable income or financial income. It's not liable for tax in Sri Lanka. And person, your apartment, everything should be there. Right? So here also it is coming under the trading stock. Therefore, it is not coming under the capital asset. Therefore, it is not coming under the investment asset. So the realization of it should be coming under. So because realization of the one that proceeds on the realization of trading stock should be included when we work out the business income. But remember, business income, you check that one, right? So what the thing that need to be considered? Realization of trading stock. Right? So that is coming under the business income. Therefore, it is not coming in. Clear? So can I have another one more question? Right? I have 2 cars. I have 2 cars, vehicles. Right? Those are used for the traveling purpose, for my domestic purpose. I dispose one. I got a gain from that. Say I got 10 million gain. Whether it is coming under the investment, come on. Tell me. Investment. Investment. This. Investment. Listen. 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 Disclaimer. This. Mark the neck here, Ben. Business. Again, because the realization of investment at the time, I should be liable for another contract again. Investment. 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 Yeah, but that's what you want. They were working nice. That they say the papers are finished. Yes, sir. Investment. Yes, sir. Okay, we can sometimes make a one now, the question paper make one. I like that. So it is very purpose. I mean, if I am doing in a recurring nature, so I am purchasing a vehicle and disposing. Yes, that is coming under this. So if it is not, I mean, if I am doing in a as a habit or a recurring nature, so cycling, I purchase vehicle and do some modification and sell it. So I told that the two vehicles I use for the domestic, my private use. Employee. I purchased two vehicles used for my domestic purpose. I sold one and I earned 10 million profit on that disposal. 10 million to 36%, 3.6 million tax. Whether I need to pay or not. You are the tax consultant. No. Neither business, no business. Taxation we have to take care. No, that is my private loan. No, I'm not going to like my account. Yes, I go to it. I use for my domestic purpose, private use. I sold one. I got an income of 10 million. Yeah. Okay, tax pay. Okay, I'm happy 3.6 again daily. May other thing? When the tax of people come here and after the 3% penalty of 20%. Investment. Investment. So yeah, put it to this one again, right? So Bill, now first thing is I know that it's I'm not doing in a way that means as a what is doing as a business. That is also happening. No, in reality, it's happening. No, some people are purchasing vehicle and do some modification. No, it's doing selling, right? So if it is happening in a way on the recurrence nature, then definitely should be coming under the business. So when we learn the business, we learn what are the barriers of trade. That means if I have an intention to earn profit, and if I am doing in a way of that cycling or recurring nature, so then obviously it should be coming under the business income. There is no doubt. We need not to worry about what is selling. It could be potatoes, it could be vehicles, it could be land, whatever. Right? But the asset type and everything we have to consider. So I told you that it is I purchased for my private usage. I use somehow I sold one asset, which is motor vehicle, used for my domestic needs or the private travel purpose, and I sold one. Right? So then we have to check that. So then business income that categories goes out because it is not I told that there is no features or measures of the trade there. There is no intention of trading, right? And obviously, it is not coming under the employment because there is no relation to the employment coming in income. Then we'll check whether it is coming under the investment income. So investment income is safe integrated. There should be integrated fashion. Investing asset as an integrated fashion. Holding or investing, acquiring or investing. So it's not the case. So then very rare to come here also. And then the doubt is whether it is coming as investment asset. Right? Investment asset means the capital assets. Definitely it should be within the meaning of capital asset. Investment asset means capital asset. Held as part of an investment. Right? So capital asset. So then check capital whether it is coming as capital asset. So again, capital asset says very the definition, exclusive definition. Capital assets means each of the following assets. Capital asset means only this. That is land or building. A membership interest in a company, partnership or trust. A security or other financial assets. An option right or other interest in any type of this category of assets. The water vehicle is there. So then it is not coming here. It is not business, it is not investment. Because it says realization of investment asset. By two things, investment income or the realization of investment asset. So then it is not coming under the investment asset. Investment income we learn, right? What is investment income? Interest, that's what blah blah. So it's neither business nor. We'll see whether it is coming under the other income. That is still we have not left, right? You have something from tax authority, right? You are working for tax authority, no? Right. So remember, so that's the way you do interpret the law. Right? The first thing, whether it is as a part of investment. So whether it is coming as investment asset. If you to get to that particular asset to the investment, it should be part of capital asset. Whether it is coming as the capital asset. So if it is not coming as the capital asset, no. Right? Right? Clear? Any question? No. I have no question to ask. This is because 2018 it was introduced to Sri Lanka, this new act, under that act, this realization of investment assets is recognized. That is, as I told you, that word what we are using is capital gain. And after long before we had that, thereafter again they reintroduced to Sri Lanka. So under that, so the capital gain tax is introduced. Not because of that thing, because previously, as I mentioned, so land and building especially, I saw that so many people they purchase land, keep some period and they are selling. Right? So they escape from that time we are not, they are not liable to capital gain tax. So the gain from the realization of investment no subject tax in Sri Lanka. So capture that particular sector. This was introduced. Especially in the real estate business. And if somebody is doing in a very formal way, yeah, it is business. Somebody can do it in a very informal way also. I purchase land, I put up millions, I can dispose. But remember, so the tax law is very particular that these things. So under the business category, you can interpret anything, any activity could be coming under the business. As you told, if I am doing in a very, the methodical way or whatever things to purchase vehicles and selling, obviously it is coming under the business. We are not bothering about that what type of activities he is doing. It is for the earning profit purpose. You can purchase and sell something. And that's what. It could be potato, vehicle, it could be land. The intention for the entry at the time of the entering into the transaction. I give some sort of case law design in Sri Lanka asset that when we are designing business income, the case law I have not discussed, but I give some indication of that one. So, Rameshwara case, he purchased a land close by, or actually agreed to purchase a land close by his school. Intention was to send her daughters to school. The land what he purchased is far beyond his private income. Not that you purchase, agree to purchase. And thereafter he do some preparatory activities to resell the land. So tax authority or the court held that, yeah, it is nature of trade. Therefore, it should be liable for tax. Yeah, one objective is to send his children to education, to school. But other thing is earning profit. Right? That's the same thing, right? Clear? Right. Land or building means include the structural improvement to the land or building and interest in land or building. So interest in a structural improvement to land or building. Interest here, interest means they are honest. But the interest I had or the interest income, but the term even we call as interest means what the ownership party have with that particular asset. Structural improvement to the land or building and include the following. Lease of land or building, that is also coming under land or building. Lease of structural improvement to land or building, and exploration, prospecting, development, or similar right related to the land or building, and information regarding the right to the above. Okay, so that is land or building. Again, tax exempted investment income. So I prefer you can read that 11 Act and summarize that what the tax exemption is available for investment income. Right? Under the 11 Act, we have schedule. Right? It says that schedule. So as per the tax law, there are schedules under third schedule. It says exempt amount. Right? Third schedule gives that exempt amount for the all the category of income or the source of income. Right? You don't like to read the 11 Act? No. So it says, from the there are some items, paragraph, and all those things. It says what are the things that is exempt. So under the investment income, says sum of income are not liable for income tax. Example. Winning from a lottery to the gross amount of which does not exceed ₹500,000. It is exempt. So we know that winning from lottery, it is part of investment income, but it says winning from a lottery, the gross amount of the which does not exceed ₹500,000, it is exempt. And the dividend also there are some exemption. Interest also there are some exemption. Another thing is depend on the source, where in the source, right? Basically, interest and dividend, we have some exemption. right? So that need to be. You have to summarize that thing and come to the next day discussion, right? Okay. Can you write down the homework? Question? Okay. Right. List the exempted amount. Recognize under the third schedule the Internal Act. Third schedule the Internal Act. Third schedule the Internal Act. Comma, which are relevant to the investment income. Only investment income, right? Okay. Right. So read that investment income and the third schedule. Third schedule. You read that one. That is for the particular year. What is the unit of fund hour? 23, 24. What are the tax exempted investment income? Right? Okay? Right. Friends, you are joining with me through this remotely. You also need to do that one, right? Hello.
Okay, so we have noted down.
Right. So then I told you that investment income, there's a direct relationship with the interest income and the withholding tax. I put the tax payment mode in Sri Lanka also. We have in Sri Lanka we have three modes of payment of taxes. Right? Three way to pay taxes. First one is by withholding. Right? So that is actually very linked with the investment income also. That's why I put that part here. And I think we are discussing under the administrative provision. I am giving a summary of there and but detailed discussion here. So other thing is by installment or by payment installment pay, or we call self-assessment installment tax payment. That's the second mode of payment. And other thing is by assessment, right? So under the investment income, or by withholding or the withholding mode, withholding means when the payer makes the payment, he holds the tax. That's why I call withhold, right? Withhold means when the payer making the payment, right? When the payer makes the payment, he holds the tax. He holds the tax with him. We call withholding. What is the amount he is holding? Tax amount. So therefore it comes as a withholding tax. not a separate tax. It is method of payment of what is income. So therefore, withholding tax always goes part of income. Right? So whose tax liability? Recipient's tax liability. He is tax liability, but what he is doing? He owes the tax. He owes the tax at the time of pay. Simple example is remuneration. If you are working under the employment contract, the monthly income is more than 100,000. So then the employee is deducting tax. He is armed with the definitely now it's a mandatory. He has to deduct tax and pay to the tax authority. He cannot keep that one. He has to pay to the tax authority. Right? So when at the time of making the payment, he owes the tax over under him, and there he is remitting that part to the tax authority. He cannot keep that tax under his custody. He has to remit to the tax authority because it is not his tax liability. It is her tax liability. Right? So that is called withholding. You may heard that in Sri Lanka previously we had pay as you earn. That is the tax. That's the very old withholding tax mechanism what we had in Sri Lanka. Right? At the time of but the earn we have to pay tax. That is coming under the employment. Previously it was as pay. Now its name got changed to what is same thing, same mechanism. API, advanced personal income. That is also withdrawn from 2020. Thereafter, again, it's introduced under the only the what the mechanism is same, then got changed. Right. So the mechanism for tax point of view, method of payment is withholding. Right, especially on the investment income, the most of investment income, I shall say that all the investment source of income is subject to withholding. Right, with some limitation. There are some limitations, but more or less subject to withholding. Right? So mechanism is what is when the payer makes the payment, he has to hold the tax and remit to the tax authority. Therefore, this part may be called tax agent. Right? He is a tax collector. He is collecting tax on behalf of tax authority. His duty to collect. His duty is to collect tax on behalf of that particular authority. He is collecting tax and remit to the tax authority. Therefore, he called tax agent. Is withholding. Withholding agent, withholding. Right? Agent is holding tax and remit to the tax authority. That's how it happens. Right? This is the mechanism. So as I told you, say he is holding tax at 14% and remit to the tax authority. Right? He is holding tax at the 14% and remit to the tax authority. Whose tax liability? Her tax liability. Right? So otherwise, he has to work out his taxable income. and taxable income and tax 30%, sorry, 30% or 36% or whatever it is. And pay. Right? Now, what he is doing, when he is making the payment, he is holding tax and he is taking the tax directly. Right? From her side, part of her tax liability has been paid by this particular person. How? In the form of withholding. So then from her side, when she work out her tax liability, he has to work out taxable income, work out that. And what he has paid to tax authority can be claimed as tax credit, tax paid, tax credit. Right? Can be claimed as tax credit. So withholding that, we can claim as tax credit. Clear? So as I told you, some withholding tax recognized under the Act itself as final. Right? Simple example. This is a company. Company is distributing dividend. When the dividend is payment to the shareholders, the shareholder, company is supposed to deduct tax. Now, 15%. Then the company dividing profit or the part of distribution of dividend, right? Profit distribution part as dividend. When the company paying dividend to the shareholders, company has supposed to deduct, has to deduct 15% tax. Withholding. So that particular withholding tax recognized under the section 88 as final withholding. Right? Final withholding. So if it is final withholding, then she need not to pay tax, more tax on this one. Right? Tax at the source, equal source, has been paid. When the income is generating, tax has already been paid under the mechanism of withholding. That particular tax, that withholding tax is recognized. If it is recognized as final withholding, she is not required to pay any amount of tax other than what she has paid under the withhold tax scheme. Therefore, as I told you that final withholding receipt is not coming under taxable income, then it's not coming under taxable income, then it's not subject to tax at the rate which her liability, which she liability. This is the maximum tax she is paying. Clear? So therefore, if any withholding tax is not final withholding, you can claim tax credit. If any withholding tax is recognized as final withholding, we cannot claim tax credit for that. When we work out the taxable income and tax on them. Available. Right? Clear? Clear? Okay? Right. So that is withholding. Withholding actually we have three parts. And the withholding tax. As I told you, first thing is withholding on employment income. That is goes as APIT. And investment income that is now goes as AIT as well as withholding tax. And on service payment that will also go as AIT or withholding tax. Advanced income tax, AIT with advanced income tax. The mechanism is very similar. So under the APIT, a deduction of APIT by employees mandatory from employment income of employees disabled from 1/1/2023. Right now also it is mandatory. Employer is obligated to deduct tax, applying the correct tax table, and tax table is published by the Commissioner on how to work out the tax, and tax on terminal benefit also liable for tax, regular income tax, and these are the tables. There are 7 tables published by the Commissioner General. Table 1, 2, 3, 4, 5, 6, and 7. 1 is for the we call regular profit. Right? If the monthly income is more than 100,000, then we can apply the table. Once we work out the tax as per the table, then whatever the tax liability, if you work out under your tax calculation as well as whatever the tax amount employed deducted are very simple. There won't be big difference. Where the higher maximum, there may be change. Otherwise, the exact amount is covered. Say you have more than 100,000 salary, so employee deducting API on monthly basis. Once you work out on the deducted your tax, if you work out your tax liability at the end of the year, your tax liability and the API should be equal. Okay, that's the way they have structured this table 1. 2 on that bonuses, just like lump sum payment, bonuses, leave and cash and all those things. Salary guess also coming here. Tax table 3, where payment consider once and for all payment, that is under retirement benefit, terminal benefit. And we have to keep the tax. Table 4, received by non-resident person, employee. Right? Table 5, monthly regular profit is less than 100,000, but annual profit is more than 1.2 million. With the case, also apply the tax. Because as per current law, the personal allowance is 1.2 million. If somebody is having more than 100,000 per month income or the profit, liable for tax in Sri Lanka. So, but there may be occasion 100,000 is less than 100. Sorry, monthly payment is less than 100,000, but annual amount is more than 1.2 million. So, what type of employment? Because of the salary increment, bonuses, and commission, incentive, OT. Because of those things, annual income is more than 1.2 million, but monthly income is less than 100,000. If you go with that, particular month is less than, other month is more than, likewise. So therefore, we have to apply that particular table, annual table. And table 6 on the tax on taxable. If the employer is paying tax on behalf of the employee, so bearing is absorbing the cost of the API, right? We have to apply tax on tax. 7 is on the secondary employment, other than primary employment. So these are what the obligation of the employer. He has to register and apply the correct table and deduct tax. No option. No alternative. He has to do that. Your monthly remuneration is more than 100,000. Definitely he has to deduct tax. No excuses. The payroll job, but the obligation. We learn. Employer has to deduct API if that criteria is satisfied. If he fails to do, he'll do. We learn. No? From this class. IT from this class, right? Got that? See that I told that. Okay. Under section 10, when we work out the business income, section 10, subsection 2, there, if that particular expenditure is supposed to deduct tax, But fail to deduct that particular expenditure is disallowed. We cannot deduct. So then salary cost, he cannot deduct as an allowable expenditure. It shall be disallowable expenditure. That's the first thing. Second thing is, US Commissioner General can demand tax from this side. Right. That we learned, right? No? General reduction? No. Right. So then, what he has deducted on monthly basis, he has to deduct that, and that particular money he has to remit to the tax authority by the 15th day or no before the 15th day of the next month. Say 30th we are paying salary, we have to deduct tax by 30th. Next 15th, we have to remit that money to the tax authority. He cannot keep that. An annual return need to be submitted each every year. And also, employer has to issue a tax certificate to the employee. Right? We call T10 certificate. You may have heard that one, T10 certificate. So, in that particular T10 certificate or tax certificate, and that is insurance tax certificate, the employee is confirming what are the remuneration, gross earnings, exempt amount, tax amount, what the amount remitted, and all those things are there. What the employment period, name of the employee, and what the EPF number and everything is there. So why he is issuing a certificate? For what? To go to an interview. Huh? Why is he issuing a certificate? Hey, can I think taking lecture. Employee income करें I'm asking. I don't know. No? Yeah, can the color? Can fire. No? No. Okay, we'll discuss that. Employee income, right? So why the employee is issuing certificate? So I told you that he can claim tax credit in his tax return. In his tax computation, once he work out the tax liability, he has to claim that tax credit what the employee is deducted as APIT. So he has to prove that to the Commissioner General, okay, I have already paid so much of tax in the form of withhold tax, which is coming under the API. That certificate I have to produce to submit to the tax authority. So Commissioner General check that certificate with this return. Not a photo certificate, then the bank will have customer. Right? That is, annual declaration is sent by the employee other side. Independently, he is sending, okay, these are the employees. I have paid so much of money as a remuneration or the bonus or gratuity or whatever thing. This is the amount I have deducted. With that, he is cross-checking that return as well as the payment. By checking that thing, he is giving tax credit. Otherwise, just because of the certificate, he is not giving the tax credit. It should be verified or the check with that annual return submitted by the employer. Right, everything is there the annual return. Name, national identity card number, or the passport number, or the now tax registration identification number, and what the period he is working here, and what the amount the gross amount he earned, and exempt amount, and the income tax employer deduct, and the payment. Right. So then certificate need to be issued by also 30th April, or if the employee resigns before that thing, within 30 days. Or the employee shut down operation within 30 days. Right, maintenance record and afford to the submit Commissioner and on the request of the Commissioner. As I mentioned, allow an option of then not maintaining tax file, not applying income return to the employer who is having only employee income, and such employer income is subject to the Commission of Trade, not partly payment. Right. In the break. Have your taken.
Excuse me, sir.
Yeah.
So I have a yes, sir.
Yeah, give me
I have
one.
okay.
Give me one time. So, yeah, income in Inavana. Taxable income එක work out කරනකොට අපි අර follow කරන දේ follow කරන්න ඕන section එක පාඩම් 10 එකට 11 එකට 12 to 19 ඒක ඇතුළේ discuss section එක තමයි. ඒක කාටවත් offshore onshore කියලා එහෙම escape වෙන්න බෑ unless it is exempt from tax. ඒ company taxation no point of mම කරන්නේ නම්බර දෙකක් නේ යන්නේ. taxation ඉස්සරහ වුණා මෙන්න impact එකම තමයි. යාගේ ඉන්කම් එකට ඇඩ් වෙනවා. මම කියන්නේ එක්ස්පෙන්ඩිචර් එක රිඩක්ට් කරන්න දෙන්නේ නැහැ කියන්නේ. ඒ කියන්නේ ප්‍රොග්‍රෑම් එක කියන්නේ. යාගේ අපේ කවුන්ටිං කොස්ට් එක තමයි. දැන් ටැක්ස් ප්‍රොෆිට් එක වැඩි. ඒතර එක්සෙම් නම් අපි ඒකට ඉස්සරහ යොදලා නැහැ. අපි හොරාට තියෙන පස්සේ යාගේ as per the law tax deduction so the function can charging penalty and collection. Yeah, yeah. Hello?
Yes, sir. Yes, sir.
Hear me?
සර් දැන් අන්තිමට කියපු එකේ දැන් අර අපි ඩිවිඩන්ඩ් වගේ එකක් හම්බ වෙනවා නම් කෙනෙක්ට එතකොට ඩිවිඩන්ඩ් එක ෆයිනල් විත්හෝල්ඩින් අඩු කරලා තියෙන නිසා එතකොට ඒක ටැක්ස් ක්‍රෙඩිට් එකකට ගන්න බෑනේ සර්.
Yeah, ඒක අපිට ඇක්ටිබල් ඉන්කම් එකට
එන්නේ නැහැ. අයක අපි ඒතර ඇක්ටිබල් ඉන්කම් ගන්න නැහැ නේ සර්.
Yeah, it is come to the taxable income. Therefore, it is coming to the taxable income. There is no, it is coming. Yeah, I mean, therefore, there is no tax on taxable income.
Okay, sir. Right. Another thing, yes. Another thing is, if a company fails to deduct that amount, as you said, then salary when they are paying, they couldn't deduct the final withholding tax like APIT. Then they cannot claim that salary expense under their assessable income, right, sir?
If they work out their business income, they cannot claim that particular expenditure.
Okay, sir.
I put it in very correct way. So, there, I mean, for the person, tax liability is coming in two ways. One thing is tax on taxable income. Other thing is tax on final withholding.
Yeah.
Right. I mean, the same. In Sri Lanka, person is liable how tax. If it has a taxable income, then as per this, what we are discussing right now, we have to work out taxable income and tax. Right. Another thing is he is liable for tax on the final withholding receipt.
Yeah.
Right.
Yeah.
Total tax liability is tax on taxable income plus tax on final withholding.
Okay.
So then final withholding amount means he has already been paid. If you put that liability, again that tax credit is equal to the liability.
Yeah, okay, so it's fine. So කලින් එවෙන් පොඩි ප්‍රශ්නයක් තුනක් තියෙනවා අහන්න සර්. Sir, අර resident individual කියන එක ගද්දී අර ඒකේ තියෙනවනේ sir, if a person travel to Sri Lanka during any year of assessment, if he travel to Sri Lanka and if he stay more than 183 days, that person will become a resident person in Sri Lanka.
Yeah.
So ඒකෙදී අපි ගන්න ඕනේ ඒ කෙනා ලංකාවට ඇවිල්ලා ඒ කියන්නේ එන දවස් ඉඳන් 12 month ගන්න ඕනේ.
Yeah. So it says any 12 month period is commencing or ending of within the year of assessment, right? So then 12 months means once he first time visit to Sri Lanka, on that day onward 12 months period.
12 month period.
That particular 12 month period, if he is physically present in Sri Lanka more than 183 days, he shall be treated as a resident person for Sri Lanka.
Okay, sir. ඒ කියන්නේ sir දැන් එයා ජූලි 1 වෙනිදා වගේ ඇවිල්ලා එයා එදා ඉඳන් මාස 12ක් ඇතුළත
ජූලි 1 වෙනිදා ඉඳන් මාස 12.
ඔව්. හරි sir. තව එකක් තිබුණා මේ අර ඉන්වෙස්ට්මන්ට් ඉන්කම් එකේ කැපිටල් ගේන් එකේ කලින් සතිය කරපු එකේ කියනවනේ කැපිටල් ගේන් realization of investment asset එකෙන් අඩු කරන්න බෑ කියලා losses
yeah, losses yes.
ඔව් ඒ උනාට සර් කියනවනේ අර investment income එකෙන් අපිට business loss එක අඩු කරගන්න පුළුවන් කියලා
පුළුවන්.
එතකොට එතන capital gain එකෙත් පුළුවන් ද සර් investment business ඒත් බෑනේ.
any loss. No any loss can be done.
No any loss.
That
Ah.
it says the capital, profit on the capital gain or the disposal of capital asset cannot be reduced by any loss. Okay, King or fan.
Alright, sir. Thank you, sir. Thank you very much.
Can we start? So then the withholding from investment return. So right now it's posted as AIT, advanced income tax. Purpose shall withhold tax as per the rate defined in the schedule. Schedule which says what are the rates that need to be applied when we are making the payment, which is subject to withholding tax, right? So these type of things, base dividend, interest, discount, charge, and natural resource payment, rent, royalty premium. So it's separately says. But the schedule one, first schedule that says, so what the tax rate need to be applied? So it's not equal rate. At the example, dividends, as I mentioned, is 15%, and interest is 5%. Discount, of course, it is coming under the interest, 5%. Charges, natural resource payment, royalty, premium, 14%, rent, 10%. Right? So different rate. Right? Where an amount winning from a lottery, rewards for betting or gambling, it's 14% again. The payment to allocation has a source in Sri Lanka. This is very important when you are discussing the non-resident tax computation. I am again discuss the same part. What is source in Sri Lanka? You remember when we discussed non-resident tax, I mean the section 2 or the section 3. So sorry, under the section 4, accessible income. When we discussed accessible income, say. But in case of the resident person, wherever the source arise, in case of the non-resident person, derived arising on a source in Sri Lanka. So therefore, it's very important where the source. If the payment to allocation has a source in Sri Lanka, then withhold tax is applied. If this type of payment are making, and there is a source in Sri Lanka, then withhold tax coming. So then National Gem and Jewellery Authority shall withhold tax at the rate provided. This is that 2.5%. When that gems is sold an auction, public auction, so they have to collect 2.5% on the sale price of a gem, right? So anyway, now this AIT also mandatory. No options. Previously we had option, but no option. So if this type of payment is making by the person, tax need to be deducted, right? Right. So what is mean by source in Sri Lanka? So in respect of employment, to the extent that derived in respect of employment in Sri Lanka, wherever the payment is coming. If the employment is exercised in Sri Lanka, we treated as there is a source in Sri Lanka. So where the employee is exercises duty. If it is Sri Lanka, yes, there is a source in Sri Lanka. Right? We are not bothering about where the payment is coming. For tax purpose. It's paid on behalf of the government, where the employment. So in case of the employment, government employee, where the employment. Dividend paid by a resident company. If the resident company distribute dividend, it shall be treated as there is a source in Sri Lanka. Say in a company we can say in a share market, we can in the share market we can invest, right? So foreigner also can invest, right? So but that particular company is a resident company and is distributed dividend. So we have to treat that there is a source in Sri Lanka. First thing, whether there is a source in Sri Lanka. That means whether that particular income is generated from Sri Lanka, right? So derived from Sri Lanka. Source, there should be a source. We will deduct tax. Interest charges, annuity or technical service fee or similar payment is paid by a resident person. If the payment is made by the resident person, other than as an expenditure of a business carried on a permanent establishment, that is something else we discuss under the permanent establishment separately. But I want to highlight here, there should be a source, right? We to deduct withholding. The source should be in Sri Lanka. Right? So why I am telling that? So it could be treated as non-resident person to Sri Lanka. It could be a resident person for Sri Lanka. Right? So you know that as per section 4, in case of the resident person, we are not bothering about where the source arises. Says wherever the source arises. Right? It shall be considered when we work out is assessable income. In case of a non-resident person, if he has a source in Sri Lanka, the particular income is derived or arises from a source in Sri Lanka, then he may liable for Sri Lanka income. Right? If there is a source in Sri Lanka. If the source is outside Sri Lanka, he is not liable for Sri Lanka tax. That means that particular income should be derived from Sri Lanka. Right? So what is derived from? The source in Sri Lanka means, say, as I mentioned earlier, say he has invested in Colombo stock exchange. Or share. He is not come to Sri Lanka, right? He can do the placement through share broker, whatever thing outside Sri Lanka, connected to the share broker, and he can invest in Sri Lanka stock market, Colombo stock exchange, right? So that particular company is paying dividend. Then that's a source in Sri Lanka. If the resident company is distributing dividend, we are not bothering about where the shareholder. Right? If the source in Sri Lanka, then it's subject to withholding tax. Right? Right? For the time being, we will keep it that thing, right? So when we are discussing the non-resident tax calculation, we will discuss how that tax is treated. Clear? So that is the meaning of source in Sri Lanka. So in case of the dividends paid by a resident company, that means if the particular company is resident company for Sri Lanka, if that particular company is distributing dividend, then there is a source in Sri Lanka. It shows that there is a source in Sri Lanka. We are not bothering about whether resident or non-resident. There is a source in Sri Lanka. So if there is a source, that is payment to allocation as a source in Sri Lanka. So then we need to work out withholding tax. Clear? So in case of interest and of technical royalty, if the payment made the similar payment, if the payment made by the resident person, then it shall be treated as there is a source in Sri Lanka. Right? So going back to the same sorry. Person is making the payment. Person, right? Making the payment. Could be and royalty, technical service fee, fund service fee. So then there should be a source in Sri Lanka. The payer is in Sri Lanka. Resident person is making the payment. Right. So Sri Lanka permanent establishment will discuss separately. So it's permanent establishment means there is a permanent place in Sri Lanka. It's when we are discussing the non-resident, we first check whether there is a permanent establishment, especially non-resident enterprise. They are having a permanent business space in Sri Lanka, then we treat it as he is liable for tax in Sri Lanka. So winning from lottery, betting or gambling relate to a game of chance held in Sri Lanka. So that lottery, draw, or whatever things happening in Sri Lanka, then there should be a source in Sri Lanka. Right? This type of thing happened previously. In the some years ago, they have done a lottery activity. From that, some person has won. He is not a Sri Lankan person, but he's treated as there is a source in Sri Lanka. Why? That event is happened in Sri Lanka. So game of chance held in Sri Lanka. Therefore, there is a source in Sri Lanka. Right? Natural resource payment made in respect of all natural resource taken from land or sea situated in Sri Lanka in territorial waters. Territorial waters means we have seabeds, we call seabed. That means what the area which is belong to Sri Lanka. That within that particular period is something is getting, so then there should be source in Sri Lanka. So that's what. Natural resource payment made in respect of all calculated by reference to natural resource taken from land or the sea situated within Sri Lanka or its territorial waters. So within Sri Lanka there is no sea, but outside, right? That's we call seabed. When paid for the use of right to use or provisions from using an asset situated in Sri Lanka. If the asset is in Sri Lanka, then there should be a source if it goes as rent. Right to use. Answers for general insurance payment to the procedures from general insurance paid by a person in respect of the insurance of any risk in Sri Lanka. Risk is in Sri Lanka. Insurance risk should be in Sri Lanka. These things are tested in a very big way when we work out the taxation of non-resident, because residents we are not bothering about, right? They are not bothering about where the source. Yes, of the non-resident, it's very important where the source. If there is a source in Sri Lanka, yes, he is maybe liable to Sri Lanka income tax. And also for the withholding tax, there should be a source in Sri Lanka. Payment received by conducting relevant transportation business. Carry the passengers who embark or cargo mail or other mobile transport that are embarked from Sri Lanka, other than as a result of transshipment or rental of containers and equipment which are supplementary or incidental to the carriage. Payment received by a person conduct business of transmitting message by cable, radio, optical, fiber, satellite, or electronic network communication in respect of the transmission message so by the operators established in Sri Lanka, whether other such message originated in Sri Lanka. This is applicable for telecommunication industry. So we are not twisting where the messages originate. If the transmission happening through a apparatus in Sri Lanka, established in Sri Lanka, so there we are considering there is a source in Sri Lanka. If any charge payments, it shall be treated as there is a source in Sri Lanka. Payment including service fee attributable to service rendered or provided from rendering services in Sri Lanka, regardless of place of payment. If the services is rendered in Sri Lanka, so then there shall be source in Sri Lanka. Whether the payer is the government of Sri Lanka, irrespective of the place of existing rendering of progress. Life insurance and retirement termination and pension payment paid by the resident person, other than expenditure of the government establishment outside Sri Lanka, inside, not inside. So, in case of the non-resident person is having a permanent establishment in Sri Lanka, also if there's a particular expenditure paid by the permanent establishment, then there should be treated as a source in Sri Lanka. So, if the payment is on behalf of government, that is also treated as a source in Sri Lanka. Gift and other extra payment to the extent received in respect of the business or investment conducted with domestic assets, which is domestic assets in Sri Lanka. Right? Payment mainly in respect of the acquisition of a domestic asset, incurring a domestic liability or realization of such an asset or liability. Payment received in respect of activity conducted of the provisions from conducting activity in Sri Lanka, except in relation to the resident person to the extent attributed to the foreign establishment. In relation to non-resident person to the extent that Sri Lanka permanent establishment. Right. So basically, uh, there is source in Sri Lanka. Source in Sri Lanka. So then, under the employment income, three categories. Yeah, learning here. Right. If there is a source in Sri Lanka, then these three categories, the particular payment or the receipts is coming under these three categories, it could be liable for withholding tax. Right? So say where the employment is exercised. If it is in Sri Lanka, then we have treated that there is a source in Sri Lanka. We are not bothering about where the payment is coming in. Right? So investment in asset in Sri Lanka, then yes, investment return. There is a source in Sri Lanka. Then it could be subject to withholding tax. Service also, if the service is rendered in Sri Lanka, yeah, there is a source in Sri Lanka. That's the difference, right? That needs to be understood. Okay? Clear? Any question? Any question? No? Ada kekalan question yang kalau ini yang bilang. No? We बोलने वाले ये break can all. Any question? Asa, I like whether Camilla product the first step. So I'm not telling you everything. You to think. To think if there are practical the question or the application or whatever. Then it's easy to you to understand the concept. Right. This is very, the very the bitter one, right? Learning theories, facts. So put it in a very practical way. That's the way you to learn. Come with question only. Those in Sri Lanka, any question was the tomato sauce. No. Yeah, the settings. YouTube. Yeah, that is actually for the transaction on cross-border activities, how it's liable for income tax, right? Because two countries involved in that one. So let me put it in this way, because actually US and Sweden, they are very advanced in the taxation. In Sri Lanka, still we don't have digital tax. In fact, there is a concept called digital tax this year, but they will impose digital tax, electronic transaction also for those things. But yeah, of course, in that particular case, I mean, the rule is first thing we have to test whether he is a resident person or not resident. Right? If he is resident person, the more or less all the countries that the universal law is, what is that? He is liable for tax wherever the source arises. Wherever the source arises. In case of the non-resident person, to the extent that if there is a source in that particular country, right? We'll put it in the same question here. Right? So rather discussing the US tax law is and the big difference from Sri Lanka. And because there is a concept called nationality concept. Irrespective of whether the resident or non-resident, if the US national, they are supposed to report everything in the US. Right? So I put that particular scenario to Sri Lankan context. Right? So Sri Lankan resident, first thing we have to test whether that particular person is resident person for Sri Lanka tax or resident person of this particular country. Right? That first we have to solve. Okay. If we become a resident person for Sri Lanka, then we are not bothering about where the source arrives. He is liable for Sri Lanka tax. Right? If we not a resident person for Sri Lanka tax, then obviously he should be non-resident for Sri Lanka tax. Then we have to check if he is a non-resident for Sri Lanka tax, if there is a source in Sri Lanka. If there is a source in Sri Lanka, or he is liable for Sri Lanka tax as well. Right? That means, say, he is resident for tax of this particular country. Right? Here it is non-resident person. So if there is a source in Sri Lanka, then he has to pay tax in Sri Lanka for that particular income only. But he received only from Sri Lanka. It doesn't mean that he is liable for tax in this particular country. For Sri Lankan context, as a non-resident, he is liable for Sri Lanka. We don't know his residency and we don't know how he is liable for Sri resident country. That could be tax in that country as well. This country as well. Because for this country, he is a resident. We don't know what the domestic of that country. But if that particular law says, okay, you are a resident of this country, then you are liable for tax wherever the source arises. Right? He is subject to tax on that to the extent that amount derived or arising in a source in Sri Lanka, to the extent that he is liable for Sri Lanka tax, as well as if he is a resident person for this particular country, as per the domestic law, the particular law in that particular country, he may be liable for tax. So that is equal double tax. This country also is liable for tax as per this law. This country also liable for this tax as per this law. Right? It is debatable. In your case, what the YouTube? So then we have to test whether there is a source in Sri Lanka in that particular country. If that source in Sri Lanka, so you don't know whatever thing he is resident, but if there's a source in America, then he could be liable for tax. Yes. Okay, clear? Clear? So actually that is called double tax. The Sri Lankan tax rate is 36%. He is liable for tax. That particular income at 36%. As in this country is liable for tax in resident person 40%. Altogether 76% tax. right? For our purpose, it says now as per our tax law says if we have paid tax in a foreign country, we call foreign tax credit, we can claim provided that particular income is subject to taxation. Resident person can claim foreign tax credit. In India. Yeah, in India. Provided that particular income should be part of our taxable income. Not necessary. There is no such. If you have paid, so double tax agreement provides the benefits to get that tax credit. That's all. So I mean to say, if you have a double tax arrangement between these two countries, it says in which country he should be paid tax. Double tax agreement is a bilateral agreement between the two countries has agreed how that particular person should be liable for tax. Non-resident person. So this country says, okay, he is liable for tax only in this country. Right? If the agreement says that, okay, he is liable for tax only in this country, then he is not liable for tax in this country. And sometimes it says, I should say, I told you in general, if the company, resident company is distributing dividend tax rate, withholding tax rate is, what is that? 15%. For the Singapore says, Singapore, Sri Lanka, we have a double tax treaty agreement. For in that agreement says, if the beneficial owner is a resident of Singapore, and there's a holding percentage also more than 25% holding, then dividend tax rate is not 15, it's 7.5%. So when we are paying dividend to the resident of Singapore and the particular condition is satisfied, dividend tax rate is not 15%, 7.5%. So in the dividend income, Singapore is liable for tax at 17%, and he can claim the 7.5% he has paid in Sri Lanka. There's a mechanism how to get the tax. Right? So why the double tax treaty says okay? So that's actually double tax treaty says DTAA. Double tax evidence act. Meaning is double tax evidence act. Double tax. So intention is to avoid double tax. One objective. Fiscal the evasion. Right? Yeah. When we are discussing the double tax rate, non-resident taxation, we'll discuss. Okay. Clear? So of course, in Sri Lanka, we don't have that digital tax and all those things. So they're difficult to capture right now. But so concept is that, principle is that if we resident, of course, we are not bothering about where the sources arise. In case of the non-resident, if he has a source in Sri Lanka, he has to pay tax in Sri Lanka. Clear? Okay. Any question? Then non-resident balance not in the Any question? No. Yeah. So then withholding tax rate, right? Our withholding tax and AIT are expected to 1/1/2023. Payment to non-resident person with respect to land, sea, air transport, or telecommunication services in terms of the telecommunication 2%. Interest or discount paid by a person 5%. Rent payment made to resident person whether where the aggregate payment exceeds ₹100,000 per month 10%. Right, rent means payment for the use of the right to use of property, movable or immovable of any kind. Hiring service is not subject to AIT or withholding tax. Hiring is not the giving the right to use the asset. Right? So that's the difference. Rent and hiring. Hiring is say and the purpose is same, right? Say you want to go say streaming that so next week is possible, right? You want to go where say you want to go to Andhra, you can take a bus. You can book the train, right? Or you can get a vehicle on a rent agreement arrangement temporarily for 3 days or 5 days. What's the difference between these three? So same, yeah, using for the same purpose, right? Right. So first one is so let's say we book the train. That's what is that? We obtain the services, transport service. We pay for that thing and get it. Right. Second thing is we get a vehicle for that journey. Person is coming with his vehicle. Same thing, right? Traveling services. For his side is getting that income. So our side is hiring. So third option, we got a vehicle, so we can use as we wish. We have to pump the petrol, we have to drive the vehicle, have a find a driver, and we can go wherever we want. For the usage, we are paying. So right to use of the property. So then it is coming under the rent. Other one is not coming under the rent, it is coming under the hire. It is part of business income of that particular person. Right? That's true. The example, so we are a company, we have manufacturing plant, we want to give transport facility to our staff, factory staff. In the garment industry, they give the transport, right? So the bus owner, he is coming with his bus, he pumps the petrol or the diesel, and he maintains everything, and he has his own driver, so sometimes he is working as a driver, and monthly he is getting some fee. Only but the rate for the distance he travel or whatever. So what he is doing, morning he takes the employees to the manufacturing plant, evening he stays. So in between he can do whatever he wants. Right? Right? That is hiring. He is doing as a business, providing transport service. Oh, we can get a vehicle or the bus from the owner. And we have to pump the petrol, the diesel, and we have to use our driver, company driver. And vehicle is parked at our yard or whatever thing. We use whenever we need. That is goes as rent. First thing is hiring, second thing is rent. Right? We have the right to use that asset as we wish. Yes, the hiring, we cannot use as we wish. So the some extent yes, but not the whole thing. Right? I'm calling to අනුරාධපුරේ ගියා නම් තමයි යන කිලෝමීටර ගන්නට අපි ගෙවන්නේ. right අපි වාහනේ එයා එතකොට distance එක ගැන he is worried. whether we go අනුරාධපුරේ ගිහලා දාව ගහන ගිහලා යනවා you අනුරාධපුරේ ගියාට පස්සේ ඉතලා no අනුරාධපුරේ it's not better. We have to go to Galle. So we are going Galle. Instead okay we can go but rate is අපි වාහනේ ගත්තොත් ඒ ළඟට දැන් කොහෙද ගියේ. කොහොමද යන්නේ? අනේ නැත්නම් අපි ගෙදර කරද්දිත් අපි විහාරේ. ඔක්කොම කරලා යන්න බරනවා. මේක. වාහනේ ගෙදර. We have to pay. Right? So that's the thing. So hiring is not subject to withhold tax under this thing, right? Only rent. Rent payment to non-resident charges, natural resource payment, royalty, premium or pays, amount as an property, exit 500,000, rewards or payment. Payment to allocation as source in Sri Lanka, in case of the non-resident, withholding tax rate is 14%. That's the difference. This is 10%. If the rent is paid to the non-resident person, withholding tax rate is 14% or rate as per the DT. Right? I will tell you why the reason. Dividend 15% to anybody. So, sale price payable to the seller of any gem sold at auction conducted by the National Gem and Jewelry Authority 2.5. Next one, rent. Fees paid for local transport services. As this is not recognized under the service fee payment, therefore no subject to 5% withholding tax. Payment for the renting of vehicle assets. Where the ability to control the assets is retained with the user. It shall be considered as rent. Ability to control the user. As with the user, retained with the user. Factors that may be considered in determining the assets on hiring or renting are valid rent agreement. As per the agreement, the condition of terms and condition of the agreement, you have to check whether it is hiring or renting. Time period and possible of reclaim the assets by the owner. User identification. Purpose of the use of the assets. So these type of things happen. You know that they are using that service of the excavator. We want to level it the land. We get that equipment or the asset, the motor, it's not motor vehicle. So you machine using the industry, right? So we don't know how to operate that now. So what we are telling them to, okay, we want to clear the land and level in the land. He is coming and he is doing that with this expert knowledge or the expert right. So we have to pay for it. That is not right. Why? We don't have the what is this? Control the asset in return with the user. We don't have the control of that. Right? So if the aggregate payment is exceeding ₹100,000 per month, return tax shall be deducted on entire amount. If the payment is exceeding ₹100,000 per month, first payment is not liable for return tax. Right? Rental payment and finance lease. This is not to be considered as rent and not liable for withholding tax. So leasing, finance leasing, installment payment is not subject to withholding tax. Rental payment made under an operating lease. That shall be considered as this shall be considered as rent and liable for withholding tax. Operating lease, of course. ROU, right of use asset, right? It shall be treated as rent. Rental payment to co-owner. If it is joint owner, so respective portion we have to consider, right? If it is exceed 100,000, we have to deduct tax. We have to deduct withholding tax. Owner means asset owned jointly. They will build in. You and sister, your husband, wife, or whatever. The particular one person's portion is more than 100,000, then withholding tax is coming. Then payment to non-resident. Irrespective of the amount, we are not bothering about the amount what we are paying. Or it as per the DTA. Right. So person make a payment to resident or non-resident person. So now the income tax can become not subject to 18 means including individual not doing business. Make a payment to resident or non-resident person. So no withholding tax. Pays an interest on ordinary loss, no withholding tax. If we are making interest payment to the bank, we cannot do that withholding tax. Right? We are paying interest, right? Say we obtain a housing loan, we have to pay interest. So at that particular situation, we are not paying we are not deducting withholding tax. We cannot. Pays interest on treasury bill or bonds. Treasury bill and treasury bonds interest payment not subject to withholding tax. If that particular person is exempt, still that no withholding tax. Right? That is the withholding tax which is related to the income or the investment return. That we call investment return. So investment return, what type of thing? Interest, dividend, rent, payment for the natural resource, royalty, technical service fee, annuity, discount, premium, that type of thing, right? And also winning from lottery. So that is subject to withholding tax. There are several rates. We have to remember that, right? So then, so we'll cover this as well. So that is service related payment. So I told you withholding tax. We have three category types of payment. So employment, investment, other thing is service payment, service related payment. On that also withholding tax is there. So with effect from January, that is also January effective date, the person shall withhold at the rate of 5%. 5%. That is rate is 5% of the payment, where the person pays a service fee with a source in Sri Lanka to a resident individual who is not an employee of the pay. Right? Resident person making a service fee payment to resident individual. Or teaching, lecturing, examining, invigilator, or supervising and examining. That type of payment, so is subject to 5% withholding tax. As the Commissioner of Brokerage or Resident Insurance says so, canvassing agent or for service provided by such individual in the capacity of independent service provider such as doctor, engineer, accountant, lawyer, software developer, researcher, academic or any individual service provider as may be prescribed by the regulation. So that they have not issued any regulation. Therefore, as of today, independent service providers mean these type of things only. Right? So resident person make a payments to resident individuals. This type of service fee is subject to withholding. But the rate is 5%. That is for resident individual. Right? I am repeating again. Resident person making service fee. What type of thing? Only this type of thing. To resident individual subject to withholding tax, provided that monthly payment is more than 100,000. Okay? Clear? Right. Provided, however, this subsection shall not apply to a service fee payment which does not exceed 100,000 per month. If it is exceed 100,000, yes, 5% withholding tax on the total amount. Yeah? Right. Then, any type of service fee payment to non-resident person. With effect from 1st Jan, a person shall withhold tax at the rate of 14%. Listen to me, gentlemen. If the person make a service fee payment to non-resident person, withholding tax at the rate of 14% of the payment, where that person pays a service fee or insurance payment with source in Sri Lanka to a non-resident person, or rate is specified in the DPA. General rate is 14%. Service fee payment to resident individual, this category is specified. Such fee is subject to withholding tax 5% if the monthly payment is more than 100,000. So in case of the non-resident person, irrespective of the payment amount, right? But the rate is 14% or rate specified in the double tax evidence act. Resident person shall withdraw tax when the person makes the payment to that is land, sea, transportation, that is 2%. Right? Right. So this type of thing. What is that? Teaching, lecturing, examination, individual supervision, examination. Payment to resident individual, 5%. Commission brokerage to resident insurance, so canvassing agent. Resident individual, 5%. They service provided by individual in the capacity of independent service provider such as doctor, engineer, accountant, lawyer, software developer, researcher, academic, or any individual service provider as can be prescribed by the regulation. Construction services, janitorial and security services, catering, management services, consultant services not subject to withdraw tax as per the prevailing law because it is not yet published. So only these type of persons are that type of service fee are subject to 5% withholding tax. It is 5%. Pays the service fee and insurance premium is the source in Sri Lanka to the non 14%. So other condition is under monthly payment should be exceed 100,000 in this thing. This is possible. Non-resident individual that is not subject to. The individual not doing business, if they are making that type of payment, not subject to withholding tax. Right? We you see that doctor payment. So we consult a doctor for our medical treatment. We are paying 150,000. So we cannot deduct withhold tax. Why? We are not doing a business. If you are doing a business, yes. Okay. By the way. So if you're doing as a business and as an expenditure of the business, you are making this type of service fee payment. So then we have to deduct withholding tax. That criteria is satisfied. Otherwise, not necessary. Right? For the experiment, if somebody is extended, we can deduct withholding tax, right? So he is not supposed to pay any income tax if the income person is extended. That's why no withholding tax. Contract payment. So government is not considered as person, only resident individual. So what are the final withholding payments? So these things are recognized as final withholding. Others are not final. Right? First one is amount paid as winning from lottery, rewards, betting or gambling, other than amounts received in conducting business considered betting and gaming. So then, what the withhold tax rate? When you are making getting the winning, what the withhold tax rate? Lottery winning? It's 14%. It is fine. If it is more than 500,000 in case of the lottery winning, subject to income tax 14% is fine. Dividend paid by a resident company, and the income tax rate is 15%. It is also fine. Payment made to a non-resident person, that is also fine. And that is final withholding. Only if there is a double tax treaty here, it is not final, otherwise it is final withholding. Why? Say we are paying rent payment to a non-resident person. So what the income tax rate? Right? What's the rate? Huh? Non-resident always 14. 14. That is fine. Why? Why is fine? The tax says that without tax this is final to non-resident person. Yeah, resident is not final, right? Non-resident is final. You know, I come to kind of so non-resident person has rendered service to Sri Lanka, right? Then when we make that service fee payment, we have to deduct tax at what the rate? Payment to non-resident 14%, right? Related to service fee payment, right? Only for the resident individual that 5% is withholding tax. Non-resident 14%. So when we are making that payment to that particular person, we have 14% pay to the tax authority. Balancing we can pay it to him. So it says final. Right. It's not final. He has to open a tax file and he has to work out tax liability and he can deduct expenditure and everything and he has to pay tax in Sri Lanka. Right? It may be only one transaction. So final means he cannot get any tax rate in Sri Lanka asset. So that is fine. Pay and finish something can go. And also, the administrator is very difficult to catch him again. Therefore, it's practically also they are considering. Therefore, it's treated as fine. Okay. Right. The withholding means person who is receiving that income of a payment that is not a final withholding payment shall be entitled to a tax credit and amount equal to the tax period as paid. He can claim the tax credit, not for the withholding which is not final. For final withholding, we cannot claim tax credit. So if there is a permanent withholding, permanent establishment, then it shall not be treated as final withholding. Right? If there is a permanent establishment, it's not treated as final withholding. The withholding payment that is not a final withholding payment shall be entitled to a tax credit and in equal amount what he paid. So what the withholding agent's responsibility? He has to register for the income, Sri Lanka income tax, and deduct tax as per the Environmental Law, Schedule 1, and remit that particular tax so deducted by the 15th day of the next month. And payment code to the practical thing. Submit the withholding return. He has to submit the withholding return. Annually. That is also 30th April. You know, APIT also, and the APIT, employee income also, employers to submit the return, annual declaration. That is also 30th, it is similar. Issuing the withholding certificate on the gross payment, tax deducted and effect details within 30 days after that, end of the calendar month, maintaining details of related payment. So he has also given, this is called withholding tax certificate. So in case of the interest, dividend also they are mentioning the dividend warrant, right? And interest, they are giving a tax certificate. Definitely should be withholding tax certificate. That's a prescribed format. That certificate should be in that particular format, right? And also it is prescribed form. Okay. Have you seen that withholding the detail or what withholding certificate? No, detail. Right. So dividend also they are giving warrant, right? How they what the profit they have used, and what the tax they have owed, is there any exempt amount, what the dividend exempt amount, everything is there. So other method of payment is by installment payment, tax payment. So actually that I will give summary of this one when we are discussing the administrative provision, also the how to pay taxes. So installment payment means if anybody having a taxable income and tax liability in Sri Lanka, he has to pay tax by installment. There are 4 installments. As per that 4 installments, we have to pay that tax. Right? So, person who is an installment payer, we call installment payer, shall pay tax by quarterly installment, quarterly basis. If he derives or expect to derive taxable income during a year of investment from the business, investment or other income, from an employment where the employer is not required to withhold tax. Right now, it's required to withhold tax. So, therefore, if somebody is having only employment income and if it is subject to APIT, he is not supposed to pay installment tax payment. So, investment and business, yes. However, gains derived on expected to be derived from the realization of investment asset during a year, one shall not be considered for the purpose of quarterly installment. So, gains from the realization of investment asset on that tax, it shall not be coming under the installment payment. We have to pay under the assessment based. An installment payer shall pay installment of tax for the year of assessment before the 15th day, respective of August, November, and February. In that year of assessment, the 15th day of the May of the following year. Next year. So, what are the 4 installments? 15th August, 15th November, 15th February, the same year of assessment. Next one is coming to the next year, 15th May. 4 installments, right? So, installment of tax payable by installment payer for a year of assessment shall be calculated according to the formula. This is the formula. A minus C divided by B. A means the estimated tax payable by the installment payer for the year of assessment. So, therefore, we have to work out the estimated tax payable for that year. C means tax paid until the installment payment, due date of the installment payment. Right? That is C. B means the number of installment, including that particular installment. Right? Tax paid during the year of assessment, but prior to the due date, that is C. Including withholding tax, that is not final. We can deduct. Right. Every person who is income payer for a year of assessment shall file with the Commissioner General by the due date payment of the first installment and estimated tax payable for the year. We call statement of estimated tax payable. We have to estimate it because first installment is due by what? August. August means within that year of assessment, right? So year of assessment is start from 1st April. April, May, June, July, August. You have to pay the first installment by August. For the based on the estimate what we are working on for the particular year. Right? Particular year, we have to work out the estimated tax liability and we have to submit the estimate statement of estimated tax payable for the year. Based on that estimate, we have to pay installment tax liability. Right? Person assessable income. So he has to estimate person assessable income for the year of each employment business separately. The person taxable income after deducting deduction was the qualifying payment delay. In estimating tax payable for the year of assessment, person may take into account a foreign tax credit to be claimed. And foreign tax credit, we can deduct claim. However, in doing so, a person may take account of foreign income tax only if the person has paid the tax, or the person reasonably estimate that the tax will be paid during the year. Right? We can claim foreign tax credit. Then we can work out the estimate and can get the tax credit. An installment payer estimate shall remain in force for the whole of the year of assessment unless the person files a revised estimate with the Commissioner General. So once you submit the estimate, it is applicable for the whole year. So estimate can be changed. If it is changing, we can make a revised estimate. Revised estimate need to be submitted to tax authority on or before the next due date of the next installment. The first installment we work out based on the estimate for the estimate for the whole year. So when we work out the second installment tax payment, we realize that our estimate is incorrect. Then we can revise the estimate and we can submit the revised. But that need to be submitted on or before the due date of the next installment. So final one is by assessment based tax. So we'll discuss that assessment. We have 4 types of assessment. Right. So 4 types of assessment. First one is self-assessment. That is assessment made by the taxpayer himself. So second thing is default assessment. If the self-assessment tax return is not there, tax commissioner general can issue an assistant commissioner can issue an assessment. Estimating is tax liability. That is default assessment. Third one is called advance assessment. Even though the taxpayer is not supposed to submit the tax return on the it's not due before the due date, assistant commissioner can issue an advance assessment and amended law revised additional assessment. Right? That is also can issued by the commissioner general. Actually, assistant commissioner is issuing. So anyway, that 2 types of assessment I am discussing here. First one is called self-assessment, that is taxpayers return. Based on taxpayers, you know that we work out the estimate tax liability for the year. Accordingly, we are making the payment. But end of the year, after the end of the year of assessment, we work out the correct tax liability. If there is balance tax, we can pay it by 30th September. That is not goes as installment payment. It is goes as assessment based payment. Right? For installment is there are 4 installments. That is based on our estimate. If there is difference between the estimate and the actual, that can be discharged by the 30th September of the year. That is after 6 months from the end of the year of assessment. Right? That is called assessment based payment. Other assessment based payment is gain on the realization of investment. If we have such thing within 30 days, end of the particular month, we have to pay. Person shall file with the Commissioner General not later than 8 months after the end of the year of assessment a return of income for the year. So within 8 months after the end of the year of assessment, we have to submit the return of income. We call self-assessment. Taxpayers return. 8 months means 30th month. Year of assessment is ending with 31st March. Right? 8 months means 30th month. So tax return need to be submitted by 30th November. The amount of tax remaining to be paid for the year shall be paid on the date that is 6 months after the end of the year of assessment for which the return of income shall be filed. So then balance tax liability that need to be discharged by within 6 months. That is 30th September. Right? Every person with taxable income consists of a gain from the realization by investments shall file with the Commissioner General a capital gain tax return within 30 days after the end of the relevant calendar month. After the end of the relevant calendar month, or the realization happens in which calendar month? Within 30 days, he has to file the capital gain tax return and pay the tax. Realization of fund. That to be paid on the date on which the capital gain tax return shall be filed. Tax needs to be paid on the same day. Right? In any other case, on the date stated in the notice of payment. So, I mean, the other assessment will discuss separately. In the assessment, it says what the date that be paid. On that day, it shall be paid. Right? So with that, actually I have covered not only that investment income, so payment, the method of tax payment as well. So important point here, what you have to take from the discussion, withholding tax payment. Other things again we are discussing, right? Withholding tax payment. Okay, so withholding is always coming with what is investment return. Right? Three categories. First one is employment income, also withholding tax is coming. We call APIT, advance personal income tax. On the investment return, AIT or the withholding tax. And other thing is, person make a payment to resident person or non-resident. Resident individual or non-resident person. That is also subject to withholding tax. Right? Service related payment. So important point is investment return. Investment return means always coming under the investment income. So more or less, both the investment income is subject to withholding tax. Right? So other than final withholding payment, we can claim the tax rate. Right? Therefore, you have to remember that tax rate and all. Right? Withholding tax rate. Right? The important point is the definition for what is investment income. Right? Second thing is realization of investment asset. I asked the question, similar question. And also withholding tax. At the rate, how it shall be liable. Right? Clear? Any question? No question? Question නැත්නම් question නැත්නම් question අහන්න. පාඩම් මට. Sorry? What we are discussing? Question में? हाँ? ऐसा कौन बोलता है? हाँ कि प्रक्रिया कौन से हैं? नहीं. हाँ? Clear. Then dia kan mangan katanya itu daripada daripada lagi apa? Dan kita sorry. There are so many questions, but we can discuss those questions in this class. Yeah. Right. So I know that how the double tax working happening. Right. So that you know that when the company declare dividend or the division of profit, so that is also after tax. Yeah, is the after tax profit to distribute dividends. I get them. So is it also double tax? You have some sort of understanding of the double taxation, right now, because the total tax, when I'm discussing the total tax of the payment to non-resident person, he could be liable for Srilanka tax under the third tax, and as well as he could be liable for tax as per his country law, right? So then it could be liable for, he could be liable for tax at the two jurisdiction, Srilanka as well as another country where he is resident. So in case of the dividend, the company is distributed dividend after tax, right? VAT, right? Profit after tax. Yeah, right? Profit after tax. It's also double tax. No. Yeah, that is also double tax. Right. So double tax is same source, tax at two different points. If it is the case, it is called double tax. Same source. For the same person. Same source, tax at two different points. So that previously I told you that in case of the investment return on service payment to the non-resident source, Sri Lankan source also tax. As a non-resident person, he is having a source in Sri Lanka. As well as resident person is wherever the source arrives. Right? At two different points he is liable for tax. That is also double. And this is also same source. What is that? Business profit. Tax under the taxable income, as well as when that business profit is distributed to the respective owner of the income is also again tax. That is also double tax. We call economic double tax. Right? There. One question. So we felt that factors. Any other question now? We are asking a question factor online. Right. Next day actually, I don't know. They answer the book on right. We have class, right? We have lecture. Yeah. Right. Next day, I'm trying to discuss other source and the taxable income. Right. So then the tax computation is almost done on the application of the tax rate and work out the tax. So it's not a big thing. So next day we can complete the tax computation. Right. So we have covered the tax payment also here, but I want to discuss that installment tax payment first, because how to work out the installment and the payment date and all those things we are discussing. So probably next day I am completing the tax computation. So thereafter I am starting the taxation of non-resident person. That's the major part of this discussion. Right? I think that is new area, because previously you have not touched that non-resident tax computation. Right. Anyway, I am discussing in the comprehensive discussion of the non-resident taxation. So that is actually the area what I am focusing on, because the other things here somewhere you may have discussed this profit and tax liability of a resident person. So main target is to non-resident taxation, which cover that what is that the taxpayer and the double tax agreement, how to apply the double tax agreement, including how to read the double tax agreement. So basically, I am discussing. I am planning to discuss few double tax agreement in the discussion, and also I am giving a assignment on that day. So we have group assignment, right? Group assignment, right? Group assignment basically based on the non-resident tax calculation. So what I am planning. Individual assignment also here, right? So individual assignment you have to. I'm not that area what we have learned on all this, right? We have to read and you have to find the figures and come with that question. Very practical issues I am giving and come with that thing. Non-resident taxation, I am giving a scenario and based on that thing you have to do a group presentation. Another final example. Group individual assignment then okay, then thank you. Any question, friends?